Hello and welcome. This is the 22nd of February 2019. And in this video, I'm going to go again through the buy low, sell high strategy, focusing within the tutorial, and in this case, using Theta. The entirety of it will be in that of accumulation. And I'm going to think accumulation mode will remain to about 6,000 Satoshi, which will then result into neutrality, probably to about 15 to 20,000, and then distribution at 100,000. I do believe that within the next year-ish or so, or at least within its next big move, is another way of putting it, a 40x gain against Bitcoin from where we stand at the 24 level is most certainly in play. So we'll assume it's been 5 days in, and okay, we got Theta on Binance. I've heard so much about it. I think it's a good coin, and well, let's use this strategy to trade it and just keep going along the way, because I want to use a coin that's probably going to be going up and make higher highs and higher lows long term to do a strategy like this, especially one over that would make lower highs and lower lows, because that won't do so well. And well, neutral, matching highs, matching lows, that's still profitable, but an uptrend is obviously going to all be the most profitable. So let's assume you get in at 3,330. What I'm going to do is I'm going to use Notepad. 1 will represent buy, although I don't even need to put that in, because if the number is higher, it's a sell. If it's lower, it's a buy. And what we'll do from this point moving forward, when we're done, is go through this, put sell orders and buy orders in, and when we're done, we'll put it into a spreadsheet. I have this ready to go. I've got more cells that I'm going to need. And there's going to be the upper sell order. And I really wish I didn't know what the price of it happens to be. I know the date's November 30th, but most of the time when I do these, it works out that I really don't know where some of the key levels are, but in this one I do. As it's going to go down, and it's going to go up to this 4,000 level, 3,600, and then go back down again. But we'll work in the mathematical levels, because we already know that a pierce below here is where you would go. So it would be an interesting spot, how deep of the pierce. And granted, because it's going to be in the thousands, there's a good chance mathematically that you're probably going to be getting around 3,000. We'll see what happens when we get there. But for now, let's consider putting in 3 orders: a buy order, a sell order, and 2 sell orders rather. So we see that it's 3,300. If we buy at 3,000, that's like a 10% move. And if we're playing short term, by all means, that's great. And why not? But I don't want to play too short term. What we can do is say, okay, how about like a number like 27? 330 plus, but we'll say a little over 600 points. That's about a 20% decline. So let's just go 26 and go for a bit more. And I want well more than a 20% for a first sell. And that's 4,000 right there, because that's about 600 plus points to get it to 20%, 333 being 10. Now I know it doesn't go higher, so I would normally have a higher sell order, but for now I'm going to put that in play. And then move the market to go forward to hit its next order, which will be 2613. There we have it. And I'm going to only have 2 lines out because I know an upper sell order is not going to hit. But now you want to reduce it. 20% on this, double 260, that's 520. So we're looking at 3,100 and change. And I want better than that. So how about this level of previous congestion, say around 33 and a quarter, or maybe 32 high, which would be about 30. That would be a differential of 360 plus another 3, like 660. So you're looking at about 24 or so percent ballpark. That's not bad. So where do you want to buy going below 2,600? We could go, I got lines in here from before, so what I'm going to do, I don't really need them in as it is anyway, and I'll just put new ones in. So we'll do 32.99, and normally I'd even go like 95 or whatever, but who cares? Because it's probably not going to make a difference. And I think the next order will be a buy as it was anyway. If you go 20, I look at it as in this way. Look at the size of this distance from this point to this area where it was. Yeah, that seems right where a leg lower would go. Furthermore, the distance mathematically is about 600 basis points, about a 30% decline. You need a little over 200, maybe 20. No. Let's say 20 plus percent decline, because you got 260 for 10%. So that means 500, and yeah, you're looking a little over 20%, which is the equivalency of to almost a 30% up move. So therefore, let's just go and see. We notice the sell was short, or the rally was short of the sell. There's our buy right there. Using Notepad again to put the stats in, or the orders in. And after our buying at 20, we have this little area here where it came from. If you're selling at 25.72, that's a differential of a little over 20%. If you want to get more creative, you got less of a chance of hitting, but you can go up to here. But for now, let's just put it in, which is still lower than where you bought, which is fine, because putting in an order here, you're just going to buy it back lower anyway. After buying at 2,000, you want at least well more than a 20% decline, which means 400 basis points. So 1,500 might sound like a good mathematical number, I would think. So we'll put at 1503. And I would normally have an upper sell order, say around 32 at this level here. And that's probably where the next one's going to be, or the November 30th one will end up being. But I'm going to be real based on the fact that what I would know at this time. And there we have a sell. I could have got more. Obviously, you can get more, but we put the sell order in and buy it back near the previous low. And obviously up the sell order as well. I'd put an upper probably at around 49 as a probably good area, because that's a key number. It's a good leg higher than that. But most importantly, its mathematical difference would be about 1,600 basis points on 33. Which means you're selling at a 50% move from last trade. And that's just a phenomenal situation to have happen. Especially because usually it's going to end up like it will on November 13th and come right back down. Okay, so let's just move on as we see the sideways range in betweening. And that looks like it would have hit 1911, and I see 1901, so the buy order would hit. And therefore, if we sell up at this previous level from here, that's a big gain. That's like 50%. And you can go for it, but if we go a little bit lower, say around 28, well, that's a differential now of 900, which is 900 on 20. That's like 40%. I'd even consider maybe going like around 25.89, which hits this little level here. Maybe even 24, because here, I know like it did before, you might normally get a better sell number, but we're looking at a differential here of, and I'd rather go 24.80ish or so. We're looking at close to 600 basis points, so that's about 30%, and that's the big number that I like right there at that point. The upper one, and that would be probably in towards this little area here, maybe around 3,500. And after buying at 20, maybe around 16 or so, I'd look to buy. That would be a move of 40 basis points, 20%. I could even consider going 15 as a little more of an aggressive play, but for now we're going to keep it at that. So we'll move the market, see what occurs, and it looks like a buy it is. And we start off with, from the open, 2 buys, a sell, and 2 buys. All your portfolio's down right now, but of course it'll change. Now the first place I'd be considered selling at is about 2,000. Differential is, well, 320 is 20%, which would be 1920. So you're doing a little bit better than that. Now if you look at where 2,000 would come up to, It's at this little key area. That is extremely conservative. And given that, I think it could probably even come up a little bit higher. And I would think I wouldn't be too surprised if it could come up even to here. And mathematically, buying at 16, selling at 21 is a differential of over 550 basis points. 160, 320, 480. Well, that's 30% just now. So we're looking at over a 30% move. And looking for a 20% decline, 160, 320. So that would make under 1300. So even go more than that. Maybe go 1200 and low change. Like 1206 as an example. And then see what happens. And then we see the 1206 low change. And again, the lower price you could have got. You could have easily, what was the low here? 982. You could have got 1,000. So after this, we would be looking to, you could put a buy order for 1,000, but it's going so wild, I don't think I would. I don't think it does break below it, but I'd be thinking towards over 850 was what I was thinking. Because I think that doesn't would be a surprise. I mean, again, I'm thinking it could even pierce below it. So I'd be like, oh, mathematically, it's a pretty good differential too. Buying at 1,200, where do I think it would have the potential to go? Previous resistance would be about 1,700. That's a basis of 500. And 120 is 10%. So we're looking already at 40. And I guess I'll now put in the higher order. First place I'm looking here again is this area. And if, for what it's worth, you could put a third order in. But for now we're just going to do 2. And leave it as it may. So as this moves on, we can see it doesn't hit the 871. And I don't think it does. And of course, this is a sell order now at the 1707 handle. And after the event, like it took place before, I would say I want to hit at this multiple bottom area. So I'd probably look to put a buyback somewhere around there. As far as where my next sell would be, okay, we have 1,700 as this one. I don't have to go as high as 2681. That was like what that upper one would have been for the purposes of a much larger gain. So therefore, if we look here at this area of congestion, that's like 2,100. Well, if we add 400 points to that, that's barely over 20%. I want a bit better than that. So I look at this area of lower support, like around 23 and change. That's about 600 basis points. So that to me looks like even ties 22s. That's almost 600 points. And 170, we'll keep on adding it. That's 340, 510. We're getting a great percentage because it's still above in those types of realms as well. And for another one above, look at this. That's just not big enough of a gain. So I'd rather pick this congestion area here than this previous high for 2 reasons. Other than the fact that it's obviously easier to hit at a lower number. But because the mathematical percentage is good, going from 22 to 34. And because it's a congestion area. So it might have a better chance of resisting here and not getting up to here. But you automatically, if say 38 is going to hit, so does 34. But if 34 hits, that doesn't guarantee 38 will. It just obviously means it probably should. And that's it. So as we go on, we can see we almost hit the buy order here in September. And I'm going to reset the scale so I can see the candles a little bit better. I'm missing it. And at this point, you could try to get a cheaper buy. A lot of times for me, I'm thinking you just let it live because you want to be protected on the down moves. Because if you don't end up buying here, you're going to be fine. And you do buy here. But if you didn't, you're going to be fine because it's just going to go up and you have enough tokens no matter what it does. No matter if it goes up, you're gonna, and you don't buy as much, you're still going to profit. And this is a spot where I wasn't too sure if it was going to hit or not. And I know we're only a few periods away from that big move. Because it happens on November 30th and it's November 20th here. As a trader, you don't know that. I'm just going to move this away from the time being. But I wouldn't buy here. I'd buy at like 800. I just know it doesn't go there. So therefore, if my last trade was 11.17, 20% on that is like 13 and a half, and I want to do much better than that. In fact, high volatility, I asked myself, can I sell or could I sell again where it was the last time? Because I'm happy selling at 1500 if that's all I can get, 1516. And in looking at this market, you got a lower high, 1484. That's the first place that would stand out to me, is below 15. And that would be a differential of like 350 points, 30%, and that's where I would go. So I'd put an order in, say, at around that level there. And as far as, I'm going to just move it back this way. As far as where the next sell order would be, it wouldn't be up there. I would think, okay, this, I'll see here. How about this? I think to myself, 14 to 21, that's about a 50% move. Yeah, I probably would. I might go a little bit higher because I think that 2180 would look, like high 21s would be better than 21 and a half. I mean, he's probably got about the exact same chance of hitting it, almost. And you get that, and for the bit better the gain you would get. And most likely what's going to happen is I'm going to sell this before that day happens. We'll see. Ooh, we're only a few days away. And there's a spot where that's all I would get. So you can see how big of profits I could have if I manipulated it to get more. But I would have had both orders hit. So therefore we have 1471 and 2181. And then we'll put that into the spreadsheet when we're done this. So this was a major event. Of course, now when you're looking to put orders in, I'd probably put an order back. I would probably go maybe 28 and up here again. I know the play is going to end up being buy, but I'm going to probably put 3 buy orders in. Split them in thirds is how I would probably end up doing this. And that would be to buy, where would I probably want to go to the first one? Probably about 1800. And then you'd want to put one in here where this line already is at 1471, but much, much lower. After all, that's where one of your cells happen to be. So you probably want to go deeper into that level. So maybe somewhere around a 1355 mark. And then I'd probably move this one up to about 1,000. Maybe even a little bit above to this low here. And even 11 maybe. So therefore 3 different buy orders. And in reality, I probably could even do pierce below. I know what happens, but you are trying to get the best mathematical gain as you can. So 16, so you put these 3 levels in, whatever the amount of Bitcoin that I would receive over those 2 transactions, I'm going to want to divide it by 3, and that's how much each one of these would be worth. And what I'm going to do, just go like this, just so I can remember a double play, we'll say, as far as what that would be. And at sell orders again, you'd 22, we are at 22, you'd probably put one up. You could put one up in here, but you could just go aggressive, a lower high at 33, matching high. Another one is just look at the hourly time frame and see where you go from there. But again, the market does retrace lower. There's one buy at that point at 1653, which means now I look at and this is where you'd have to go. I'm not going to do it now, but you have no choice but to go to the hourly, 4-hourly time frame to find maybe some key areas, because you're not going to find it too well here. You still can go by mathematics and where it was. I'd probably look. Okay, it's to me selling around here is just too small. We're only looking at a little over 20% as it is here anyway. And this is by far a conservative lower high and a very good sell point as it is as well. So I'd probably put one here. And I'd even probably put my second one like around 36.55 or 36.49 area. I'm not going to put the line there, but that is realistically where I'd put my upper sell order. And we can see here that it does hit the 13.55 line for another buy. And that means we can, if we look up here, this previous high, that's a difference of about 500 basis points. That's close to 400%. I can even go a little bit lower, like maybe 1790 something. There we go. And an upper, a little higher now because one, you're just saying that was a conservative level. You want this mathematical differential to be pretty good. So I think that's a good conservative number, but nothing wrong with putting one up here or up there by any means. As creative as you want to go. We've seen before on the November 30th that if you had something like this before, then I would have sold at that upper area instead and it would have been more profitable. But that's how it works, in that when you're more aggressive, you're going to hit less often, but you're going to get a better reward when it happens. And as it continues on further, it misses the 1104, it misses the sell order. I'm not going to remove or move it lower or higher. But we're moving into the new year, it's January. And now it looks like it hits. This is 1798, so it does. And look, buying it back in here, 1800 to 1400. Okay, but given that you're already at 11, it's probably what I would do. Have to put a new sell order in. So after a gain from 1800, 180 times multiply that by 2, 360. That would make 21 change. So I'd want to do at least 2300 minimum. So we'll even do, say, 23 like high. Go a little bit up. There we go. That's fine. Might as well reset the scale so we can see the charts or the candles a bit better. The 1400, that sucks when that happens. There we go. We got a sell, and we're now entering where we are now, as it's February the 9th. So therefore, let's bring this back down again. So 2375. If you're buying back at 1800, which is this little key area here, we're looking at a pretty decent decline, a pretty decent buyback. And after 2375, I'd probably want to go probably even close to 3,000. I think you'd want to go that number below. I think that's the obvious play. One, it's a spot it would go to as far as it's a common number. Two, the mathematical difference is a little over 600 points. So I mean, it's barely over 20%. It's the lowest I could actually go. I couldn't go 28. And that's where it would stand right now. So I'd be looking either to sell at 28 or buy at 18. I do nothing. And every day you would log in, you would see, okay, nothing going on. And you just wait until you get an order to fill. Then when an order fills, you would execute such. So that's now let's take the data and put it into the spreadsheet. What I'll do is I'll take edit, select all, and copy it. Into my spreadsheet, I've got it already set up where I can just get ready and keep trading as need be. There we have it. So there's only just a small amount of trades. And this is already calculated for purposes of just putting it into the Satoshi price. So let's just assume you start off and you buy, we'll say 10,000. So you're putting a third of a Bitcoin on it to begin. Okay. Now off the bat, even though a sell order doesn't occur, we're looking to sell 10% of what we own off of a buy. But the 1100 or the 1000 sell order, that first one around 4,000 would not have hit. At this stage here, I want to buy well more than 10% of what I already own. So if I go like 1500, it would only cost me a fraction, 0.04 to a third of what I had. Furthermore, at 11,500, that means instead of selling 1,000, now I can sell 1150. But another buy comes in. If I were to say buy 2,000 because I'm stoked that this is going to be good and I kind of wanted a little bit of a decline, now I've put in an extra 0.08. My inventory is up to 13,500, which means I'm going to sell 1350. 1350 sells for 0.034. And what would we buy that for at 1900? If you put 1600 in, it's 0.030. How about 1700? You can see that it's going to be somewhere around in. Well, it's going to be over 1800. That'll work. So 1820, so you'd end up buying 420 plus 50, 470 more. But now we go into new buy territory for 2 more. So therefore, let's just assume, okay, last time you rebought in for 2,000. Now you do so for 25, it cost you 0.04. As I stated before, you want to buy at least to have another 0.33 handy, or a third of a Bitcoin. Well, now 8 plus 4 is 12. So if we go into, say here, you want to, this is like, okay, let's load up even more. Let's go 4,000 here. Well, now we got less than 0.09 here. We have 0.08 here, which means it's less than 0.17. You've pretty much put half of what you had into it. So the other half would take a pretty decent decline, and you're at 1,206 Satoshi. Furthermore, now we're at 20,000, so we can sell 2,000 here, which is what we'll do. Sell 2,000, and now you'd sell for 0.034, which is not bad. You got to buy back at 1117, and this is a pretty deep buyback here, because 2,500 is still well lower than that number. 2,700 is well lower. Now 3,000 on the other hand is, well, it's still lower too. So you're getting over, let's just put 3050 in. Yeah, that's pretty much right. 1,050 on this kind of a gain. That's phenomenal. And now we got 21,500, so we can sell 2,150 in here. And how much would this is where the DP means, where the upper sell order would come into play. So therefore, what would be a realistic level? I'm not usually going to double it, which would be 4,300, but somewhere around 3,500 would make sense. So now it's 7.6 of a Bitcoin and 3.1. So let's just see what this would work out to. I can go equals this plus this, which is 0.107, and that's going to divide it by 3, which would be about 0.35-ish or so, 3.36. Yeah, 359. So then let's put this one in. This is 2 of them at the 359, whatever that comes up to. So 3,000 would be much less than that. So 20. There we go. So there's 359 there. And we'll just do it that for 356. Close enough. Now before we were selling for 2150. And the inventory is down to 20,670. So there's no need to change it. We'll keep it at 2150 for these 2 sell orders. And as it would play out, you'd be down to 16,370 after you start off with 10,000. But the price, of course, is lower at this time. We'll eliminate what we don't need here, which is some of these rows here. And give some statistics here. We'll do a sum of how much was bought, which would have been 0.64. Actually, you can't see it. 0.64. and that would have been buying 29,000. We will do a sum of what we sold, 13,000 for 0.26. What's the differential? Well, we'll take this, and then we'll subtract this. So 16,370. At what cost? Well, we'll take this number, subtract this, which would be 0.376. Okay, that's what you'd have so far. After initially putting in 0.3333, what would have ended up happening compared to, in a comparison of just huddling and doing nothing, is you would have put in an additional about 12% more, 14% more of that equity, and in return received 63.7% of the coins that you had, which is a pretty fair deal, I would think, as far as what your portfolio would stand as far as your average buy. You can take the 37 and put it up to it would work out to $22.99. So you'd be in at an average price basically at $2,300. So in a spot here, you're barely profiting. But that's the beauty of playing within these strategies, is you're going to have situations where you're going to be down as far as the market's concerned, because when you start back in here when it was 3,300 and it goes down to 24, and you get a small profit for a market down 30%, well, that's pretty good. Pretty good to profit when it's down. And then generally what's going to happen when these things pump up is this thing's going to go up to like 4,000, and you're going to be doing better than where you would, of course, still in here. But then if it goes up to like 80,000, 130,000, you're going to notice that this thing, when you were talking about getting in at 34, it's up, say, 33 times. Well, when it's up 40 times, rather. That you might only be up 25 times, or 20, or something like that, or 20 times. Well, when it comes back down to, say, if it goes, say it comes back down to 10,000 or whatever, after that, because they usually do that. If it's going to go way up to, like, say, 100,000, it's not a surprise to come back to 10,000. That's how sick these markets are. But how sick the mathematics would end up being is, as I was noting before, if this market goes up 40 times and you're sitting on a 25x move, well, that means when it goes back down and then this thing is only up 3 times, well, you're still up over 10 times. So you now would be overperforming it when it's declining at that stage. That would be a very normal situation. Thank you for tuning in, and have yourself a great day. Bye-bye.